As of the close of the regular trading session on July 29, 2026, the U.S. stock market is closed, and Lithium Americas Corp., trading under the ticker symbol LAC on the New York Stock Exchange, ended the day at $2.75 per share. That represents a drop of $0.13, or roughly 4.48% on the session, with intraday trading swinging between a high of $2.88 and a low of $2.74 on elevated volume. When you look at a stock trading under $3, the knee-jerk reaction among retail traders on platforms like the Robinhood app or SoFi Active Investing is to assume you are looking at a dying asset or a speculative penny trap. The surface story tells you that soft global spot prices for battery metal have crushed pure-play developers, draining capital and dragging share prices down across the entire junior mining sector. But when you pull back the curtain on Lithium Americas, the actual situation is almost the exact opposite of what that depressed ticker price implies. While the market is pricing this company as if it is struggling to keep the lights on, Lithium Americas is sitting directly on top of Thacker Pass in northern Nevada, which happens to be the largest known lithium deposit in North America. Even more striking is who is standing right behind them. General Motors has poured nearly $1 billion in direct equity and joint venture commitments into this single project, while the United States Department of Energy stepped in to take an equity stake alongside a massive multi-billion-dollar loan agreement. That creates a massive disconnect between price and structural backing that every serious investor needs to understand. The standard belief circulating on mainstream stock forums and retail investing sites is straightforward. Until electric vehicle sales hit a massive surge and commodity spot prices skyrocket, holding junior mining stocks is just burning cash. It's easy to see why people think that way. When everyday traders look across their individual brokerage accounts or check their portfolios on the Interactive Brokers platform, they see high-flying tech megacaps soaring while battery material supply chains stay in the gutter. The expectation is that Lithium Americas will just continue to bleed capital, dilution will wipe out early investors, and the stock will remain stuck in penny stock territory indefinitely. The reality, however, tells a far richer story. What the surface narrative misses is that Lithium Americas is no longer being treated as a typical high-risk speculative exploration play by major institutional players and national policymakers. Instead, it has effectively been drafted into the national domestic energy strategy. When a federal government takes an explicit ownership interest and restructures financing to ensure construction stays on track regardless of short-term commodity swings, the risk profile of the asset changes completely. The short-term market is pricing current spot commodity weakness, but the strategic backers are building long-term industrial infrastructure meant to secure supply chains for the next 30 years. If you look closely at recent stock price action, LAC has been locked in an intense tug-of-war between short-term macro sentiment and long-term capital influxes. Daily trading volume has consistently spiked during broad market sell-offs, showing that algorithmic trading models and short-duration funds have dumped the ticker whenever broader commodity indices tick lower. Yet institutional tracking data across platforms like Fidelity Wealth Management shows that long-horizon funds and specialized material funds have quietly maintained or even restructured their positions through dark pools and secondary offerings. The recent intraday swings between $2.74 and $2.88 highlight how tight the trading range has become. Selling pressure appears to hit a wall as the stock approaches the mid-$2 range, where value-oriented buyers step in, recognizing that the market capitalization is approaching a level that drastically undervalues the total capital already committed to the ground in Nevada. To understand why this gap between price and valuation exists, you have to look at what Lithium Americas actually is and how its corporate structure came to be. Based in Vancouver, Canada, the company in its current form emerged following a corporate split designed to separate its North American assets from South American operations. The entire focal point of the business model is Thacker Pass, situated in the McDermott Caldera in Humboldt County, Nevada. This is not a scattered collection of speculative claims, it is a massive, concentrated claystone deposit containing battery-quality material. The business plan is simple in concept but massive in scale. Construct extraction and chemical processing facilities right on site to produce 40,000 metric tons per year of battery-grade lithium carbonate in its initial phase, eventually expanding further. Rather than selling raw ore overseas for processing, Lithium Americas is building a fully integrated processing operation on American soil, targeting the exact specifications required by major automotive manufacturers. Financial reports from recent quarters reflect the heavy capital burn typical of a mega project still in its construction phase. Operating cash flow remains negative, and net loss metrics reflect substantial capital expenditures as heavy equipment, earth-moving operations, and site foundation work advance in Nevada. In junior mining, these financial statements often frighten casual retail traders who check quick metrics on the Fidelity mobile app or SoFi robo-advisor tools without analyzing the capital structure. They see negative earnings per share and high capital expenditure numbers, interpret it as financial distress, and hit the sell button. But for an asset entering full-scale construction, heavy spending is not a sign of weakness, it's the necessary bridge to commercial production. The broader macroeconomic environment has created intense noise around the stock. While high interest rates historically weighed heavily on capital-intensive development projects across the resource sector, the unique partnership structure surrounding Thacker Pass has isolated Lithium Americas from traditional debt market pressures. When General Motors restructured its funding agreement to inject hundreds of millions of dollars into a joint venture structure, it provided a massive balance sheet cushion that few other junior mining firms possess. Take a moment right now and drop a comment below letting me know how many shares of Lithium Americas Corp you currently hold in your portfolio, or tell me if you think domestic supply chain projects like Thacker Pass will ultimately outperform broader market indices. Looking ahead, the market is heading towards a clear decision point on this stock, where expectations will inevitably clash with operational reality. The pessimistic expectation held by short sellers is that construction delays, environmental litigation, or lingering low spot commodity prices will force further capital raises that dilute equity holders into oblivion. Under that scenario, the stock continues to chop sideways or test lower lows as market participants treat it as a frozen option on future metal prices. However, the alternative scenario rests on tangible milestones as earth-moving transitions into facility assembly and mechanical completion. As construction milestones are hit and the timeline towards commercial production shortens, the market will be forced to reevaluate LAC not as a speculative developer but as a producing asset with locked-in offtake agreements with one of the largest automakers in the world. Furthermore, any policy shifts emphasizing domestic critical mineral independence serve as an immediate tailwind for domestic projects, potentially driving institutional inflows through Fidelity ETFs or specialized sector funds that target on-shored materials. When you compare Lithium Americas to high-flying tech names like NVIDIA stock, steady megacaps like Apple stock, or EV leaders like Tesla stock, you're looking at completely different investment dynamics. High-growth tech names trade on immediate cash flows and immediate product cycles, while a strategic critical resource asset trades on long-term infrastructure demand. For investors managing self-investing strategies across platforms like Interactive Brokers or Schwab Intelligent Portfolios, balancing speculative high-upside material plays alongside stable index funds or Fidelity mutual funds requires seeing past daily volatility. Whether you use Robinhood stock trading for quick tactical plays or rely on Fidelity brokerage accounts for multi-year holding strategies, the key is understanding what you actually own. Ultimately, the central tension surrounding Lithium Americas comes down to time horizons. The expectation reflected in today's $2.75 share price is that lower short-term commodity prices make junior developers unappealing. The reality is that Lithium Americas is backed by institutional capital, corporate joint ventures, and government loan facilities that give it the runway to build through the low end of the cycle. As Thacker Pass moves closer to operational reality, the market will eventually have to reconcile a sub-$3 stock price with a world-class domestic critical mineral asset.